Only mode.
Good evening everyone and welcome to Admiral Markets webinar of 4th of June 2014. How to turn scalp into intraday position. My name is Nenad. I will be showing today how you can go from scalp to scalp swing into intraday position. So how you can turn your short-term trades into longer-term one. Before I begin, I want to tell you that you can also read the analysis on Forex Street. Also, you can read all the analysis there. Forex Street is one of good sites for Forex, of course. And today we had great setup, which I posted also on Admiral Markets blog. You know, EuroCAD. I hope that you got into this trade because here at this point around 70, 72, it was basically 30 to 35 pip trade, which still has the potential to go to this target, but it was nonetheless, it was very, very good. Also, cable was very good. I will show you the cable trade before we begin with our webinar. Let me find the cable trade. And I hope that you got many pips, especially this week was great for trading. Cable, June 4th, just after I posted the analysis, you could have seen that basically the price jumped off this region here and went 40, 50 pips to the upside. So this was a great counter trend trade, actually, intraday counter trend trade. Yeah, I felt cable wouldn't hit 68. Yeah, it failed to reach 67, 70, but if you got here, you could have got 70 pips, 60 pips, right? So it isn't that bad, right? 60 pips. Yeah, I also thought it could hit 68, but well, 50, 30 pips out of this trade. It was good because we don't trade just one pair, right, Darshan? We trade many pairs. So even if you get 30 pips out of the trade, it's still good. It's still live money, good money. And 68 was indeed, it was ultimate target for this potentially good trade. 6800. But, well, you know, you never know with the market. Entry point was good, but then it was rejected a bit. Now it started to fall again. It's still trapped in this range here, and I think that, yeah. Thanks, Darshan. He says, love how you pronounce my name, foreigner. Bang on. Darshan Patel. Yeah, Darshan. Well, I think on 5th of June, that will be tomorrow, it will be very volatile. So guys, be very, very careful what you do tomorrow. It will be huge volatility tomorrow. Really. It will be huge volatility. ECB, press conference, minimum bid rate, GBP, Bank of England governor we speak. Also on Friday it will be NFP, and well, that will be very hard to properly trade, but let's see if we can take some other setups potentially on other pairs tomorrow. We will see. So let's get back to our webinar. First, risk disclaimer. As you all know, by accepting this risk disclaimer, you're agreeing to proceed further with me. Online educational materials are developed by Admiral Market as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions. The website in the video is not the .co.uk website, but the globally used .com website. Forex is risky business. This is a personal opinion only, and this webinar is for informational and educational purposes only. So, what is scalping? What are scalp swings? Knowing when to scalp, what is intraday trading, intraday time frames, and turning scalps into intraday positions. That is what we will work on today. Scalping is the easiest way of trading. This is quick bucks. We call it quick bucks, quick dollars, euros, whatever currency you want to have. So basically, scalping is the fastest, quickest way of trading. I intentionally put this picture and this slide because scalping is not gambling. Few webinars ago, and after a friend of mine listened to the webinar, he told me, because he is basically a novice forex trader, he told me that scalping, because you know, when we start to trade, we usually start with scalping, right? We don't make any, I don't know, big intra-week or intra-month trades. Usually we try to scalp, and especially if we work with fake money, with demo trading. And then when we see 200, 300, 400 pounds or dollars in a single hour, then we usually say, wow, this is great. And then we start to take 10, 20, 30, 40, whatever. And basically, he told me that the Forex way of scalping reminds him of gambling. And I intentionally put this picture because this is a fake. You know, this card, if you play, I don't know which games you play, but usually this card is, we call it a cup. This is a cup. And cup usually in one game we play is a fake card. So basically, it's not gambling. Scalping is not gambling. Each way of Forex trading has its own rule set and has their own rules. Scalp has its own rule set. Scalping. Intraday trading has its own rule set. Breakout trading, counter trend trading, those are all different types of trading. And if you do it properly, with good money management and with good trading psychology, you cannot talk about gambling. So scalping once and for all is not gambling. If you know what to do, then your odds will be and will raise to 70-30. Initially, when you enter the market, your odds are 50-50. But by using technical indicators, by using a proper money management, by using this kind, which I will show you, basically using trailing stop, then your odds to a profitable trade increase. So you will start with 70-30 chance to win the trade instead of 50-50 or even less if you don't use a proper method or system. Scalping use and requires momentum and volatility. Momentum is a big difference when you trade. You can scalp when there is no momentum. As you probably remember, we talked about it yesterday. But if you scalp without momentum, you need to be ready to basically take 5 to 10 points out of the market. But if you scalp with momentum and volatility, we talked about it yesterday, you can turn a scalp swing trade into an intraday position. So scalping basically requires momentum, although you can scalp without a momentum. Usually, you know, let's talk about Friday, for example, or we can talk about tomorrow also. Before ECB announcement tomorrow, I think there won't be a big volatility, especially in euro crosses. And you can basically take few pips here and there. But if you're on the right side of things, when ECB conference starts tomorrow, you can turn your scalp trade into intraday position. And that is also how I did today on EuroCAD. I basically used EuroCAD news to get me to a retracement level, which I posted prior to news. And then first I started with a scalp swing trade, and eventually I got 30 pips stopped with a trailing stop, but 30 pips out of it was great because I use momentum. Momentum in forex trading is the leverage for your profitable trade. Without momentum, you can go and scalp few 10 pips, few pips here and there, but it's impossible to make a switch. Switch is a term which I use when I turn a scalp or a scalp swing into intraday position. That is called a switch. And basically, by switching my position, I secure the profits, so I can safely move on from my trading platform, trading station, and do other things. Except for my job as a mentor, as the head lecturer at Admiral Markets, I trade full-time, and also I have students which basically use and want to trade Camarilla MACD. So also my job is to trade, to make analysis, to do webinars, lecturing, and so on. And you know, sometimes it's much easier for me to put a trailing stop and just relax a bit, do other things, than constantly babysitting the trades. Some time ago, maybe 4 or 5 years ago, I was actively staring at the screen, watching what price does, making 1 or 2 trades per day. But today it's completely different thing. And really, guys, this kind of switching is a day breaker for me. It really dawns my day. It really makes me happy when I do such thing, because when I'm in profit, I just use trailing stop, but I will show you how to use trailing stop, and I'm safe to do other things. I don't need to manage 5 or 2, 3, 4 of my trades which are simultaneously opened at the same time. Fortunately enough, we don't suffer. We are European traders, mostly European, Indian. We have traders from all parts of the world, fortunately enough, and we don't suffer from first in, first out rule as USA traders do. Basically, USA implies all of their traders to go with first in, first out. And that is what I wouldn't like to see here in Europe, really. Because first in, first out rule means that the first trade which you opened also needs to be the first trade you will exit. You cannot exit the second trade first. You need to exit from the first trade. I don't like that rule, really. And I'm really happy that we here in Europe, we don't suffer from that kind of rule set. So scalping is unfortunately hard to do with first in, first out rule. And all those things which I will be explaining today, those things a little bit hard to do with USA citizens and USA traders. But I presume that all of you are trading in Europe, so you won't suffer from first in, first out. For me, nonsense rule, if you ask me. So scalping uses small stops. That is why we need to be very careful when to scalp and when to do it. So scalping is the quickest way of trading, also done on lower time frames, M1, M5, M15. That is not scalp swinging. I'm talking about scalping now. It exploits sharp movements you need to use leverage if you scalp, because if you scalp, you will probably be making, let's say, 5 to 15 pips, but usually it's in between 5 and 10 pips with a little bit of leverage. You won't use the same leverage for scalp swings and for intraday positions. So with scalping, you will use a little bit of less the leverage. Targets are lowered accordingly. Targets are not the same for scalp swings and intraday positions. And you need to know that breakout trades are also one of scalping strategies. If you know how you trade breakouts, how I teach you to trade breakouts, you have basically 3 different methods to trade breakouts. First is a breakout retest. So this is breakout, this is important level. So this is breakout and this is retest. Immediately after the retest, you can open your position. So you open your position immediately after the price hits this level and rejects at the first or second time. Then there is a trigger happy trade. This is the price, and once the price breaks this important resistance by 2 points, you immediately put a market order in. So this is basically a trigger happy trade. So immediately after the price breaks through this important resistance, you are making a trade. Those trades are maybe the most risky trades of all, the riskiest, but sometimes you can do it. Maybe when I need to make a special webinar, it's a big subject, when to make trigger happy, when not to make. But let's say that sometimes if ATR is not hit, if it's below 70% and daily highs and lows are to be broken, then you can make trigger happy trades. Usually those trades are the fastest ones. Even faster with the standard way of scalping. Even faster than those. And the third way to scalp breakouts is breakout, pullback, continuation. At this point, once the price breaks through the level, you make a trade. So this is breakout, pullback, and continuation is 1 or 2 pips from the breakout point. It's hard to do very good breakout, pullback, continuation trades on pairs which are not volatile a lot, because many pairs are not volatile, and volatility is indeed, as I talked about it yesterday, volatility dropped over these last couple of years, and basically 5 years ago, 10 years ago, you could have seen that euro dollar is making 300 pips per day, GBP was making 500 pips per day, and those times will not show again. They will not repeat anytime soon. Maybe in a I don't know, late future, but anytime soon, I don't see that euro will be making 200 pips per day or GBP will be making 500 pips per day. So breakout, pullback, continuation, maybe it is good, really. It's a safe trade, but usually the targets are lower. So those are all kind of things how you can basically do breakout trading. Some time ago, some brokers prohibited scalping. You need to stay away from such brokers, because any good or honest broker, and now I'm also referring to Admiral Markets, will never stop you from scalping. But bear in mind that you are not allowed to do arbitrage trading, and you are not allowed to make a very high frequent trading, because there are some very successful high frequency trading robots which make over 1,000% of profit, but those are not allowed on many brokerage platforms. Basically, with high frequency trading, you you can be breaking one of the rules of trading, which is specifically stated in the contract you have made with your broker. So arbitrage trading and high frequency trading are not good, and they can be good for some traders who want to exploit it, but they're not good for brokers. And you know, brokers can shield themselves from those kind of trading. If you do a normal way of scalping, how 90% of traders do, you are of course safe. How foreign scalpers make money? By patience. You need to be patient if you want to make a trade. If you don't have a patience, then what can I say? Maybe the trading is not the right kind of job for you. Because if you are impatient, probably you will do a bad trade, and that bad trade will lead to revenge trade subsequently. So even if you scalp, because I told you that scalping is the fastest way of making money, even if you scalp, you need to be patient, because it is the same thing scalping with on 5-minute time frame or making intraday position. They require you to be patient and to wait for a proper entry rule set which needs to be respected in order for you to take the trade. So impatience is not good. Low spreads, it's extremely important that you scalp with a pair which has low spreads. Fortunately enough, Admiral Markets Pro account has great spreads. The biggest spread is GBP New Zealand, and it's 4 pips. But GBP New Zealand, I don't scalp with it. I make scalp swings or intraday positioning. Majors go from 0.4 to 1 pip spread, and minor crosses, usually there is 1 to 2 pip spread. So actually, Pro account with Admiral Markets is also very, very good to scalp with, because it will give you potentially good setups on lower time frames. Momentum and sharp price movements is also important, because you will see later that if you know how to exploit the momentum in your favor, you can turn a scalp trade into intraday trade. Ahmed says, Admiral Markets should reduce the spreads for pairs like GBP New Zealand and encourage scalpers. Well, you know, if it happens, it will be great, because, you know, GBP New Zealand is a great pair to trade. I like to trade it from time to time. It's a very fast trade. You know, Euro, Dollar, GBP Yen, GBP New Zealand, GBP Aussie, AUD, those are fast pairs. And you will be making more pips than with GBP Dollar or with Euro Dollar. But of course, if you want to scalp GBP New Zealand, it's hard to do even on Pro account, because currently it's 4 pip spread, but maybe in future it will be changed. So yeah, Anis is telling me that she or he, sorry, no, maybe it's he, completely agree with you. I do the same. So yeah, you need to pick up, yeah, he, thank you, Ahmed Anis. So I think Ahmed is the name, Anis is a surname. So yeah, sorry, I agree with you. You need basically to pick the pair which doesn't have a spread more than 2.5 pips, and then scalp it. Of course, majors are most popular for scalpers. Euro Dollar, GBP Dollar, Aussie, Dollar Swissy. So most pairs have 0.5 to 1 pip spread. But if you start from intraday trade, then you are good to go, even with GBP New Zealand. GBP New Zealand in its current state is good to go as intraday trade, intraday pair. It isn't good to go for a scalp, and it can pass as a scalp swing pair. But all other pairs which are meant to be scalped should be below 2 pip spread. Should have below 2 pip spread. Then we need to count also counter trend scalps, because if you know how to make counter trend trades, you can start with counter trend scalps and turn those trades into intraday positions. Then breakouts, as I already mentioned, and finally leverage, because if you start with scalp, you will use higher leverage than with scalp swing. If you start with scalp swing, then you will do higher leverage than intraday positions. Intraday positions tend to have, and you should go with the lowest leverage with intraday positions, because those positions require you to raise your stop loss. Usually stop loss is in between 30 and 35 pips. My average stop loss is 30 pips. A low momentum, you can, as I said, you can scalp with low momentum. Then we have range. You can go with range scalping from the bottom to the top or from the top to the bottom, as we did basically with euro dollar this last couple of days, maybe the whole last week, basically scalping within the range. And it's important to know that the best time and session is London or New York session. Good scalping setups are usually found 10 minutes prior and 10 minutes after top of the hour, or how we call it, TOTH. So it's the top of the hour, or TOTH. So those good setups are found 10 minutes prior and 10 minutes after TOTH. First 3 hours of each session are most suitable. Remember that now and for always. First 3 hours of London, first 3 hours of London Euro cross session, and of course first 3 hours of Asia session. Those are the times when you need, and if you want to scalp, you should scalp it then. Very often it will happen that if you make a trade, let's say now it's 6:30 p.m., your trade maybe will be 10 pips in profit, and subsequently it can go to 2, 3, 5 pips in a loss. Then basically it will done nothing until Asia session starts. So many times I open trades now, and till Asia session nothing is happening. Few pips here and there, which basically I even cannot scalp if I take 2 pips only. That's stupid. There are times when I take 2 pips. You know when, and I will show you when. Let's say that I open my position here, and my stop loss is here. If my trade initially goes very close to stop loss, and then subsequently turns to my entry position, then I can close my trade for 2 pips. It's basically a break even, but you know, let's don't call it a break even because of commission. I just want to make it up for that commission, and I close it after 1 or 2 pips after the price almost hit my stop loss. And that is the only time when I do those, basically those 2 pip winners. My scalps are usually between 5 and 15 pips, because if I go scalping, I know how to turn my scalp trade into scalp swing trade. How to make a living day trading when markets are slow most of the time? Is scalping the answer? Ahmed, markets are not slow most of the time. The problem is, you know what the problem is? The problem is traders usually have the time to trade when markets are slow. If you get up early, let's say the first 3 hours in London session, you can also make a scalp swing or intraday position. If you trade, let's say around, I will talk about my time now. It's 6:30 p.m. now. So if you start to trade, if you start trading around 2:30 p.m., so 4 hours ago, it's basically the start of New York session. Then I need to say that markets are not slow then, but they can be slow if you trade only one or two pairs. If you want to make a living of the forex market just by trading, then you need to have a lot of money. Believe me, you cannot make make a living from $10,000, because if you make, let's say, between 2 or 10% per month, let's say that you are constantly good, $200 or $1,000 are not enough for a living, right? So basically you can go with the basic living, you know, paying the bills, but that kind of money is, even in our country, in Serbia, it's not enough. Really, it's not enough. For a proper living here in Serbia, we need to have, basically, I will tell you, let's talk about family, proper, normal family with 4 members, and I think about husband, wife, and 2 children. You need to have at least 2,000 euros if you want to live properly, normally. You know, I'm talking about normal living. And if you are alone and you want to make normal living, at least 600, 700 euros for one person, for you alone. And that I talk about normal living, not luxury living. You can go, you know, with your friends here and there, but the minimum is 1,000 euros. At least I need to talk. I talk now in Serbia. At least you need to make 1,000 euros per month if you want to live normally. Anything below that is living from a day to a day. You know, it's basically ad hoc. A day, from one day to another day. And I cannot talk about those guys who have only 200 or 300 euros that is basically surviving, you know. So if you ask me if you can make a living out of just by scalping out of forex market, I need to tell you the truth. Don't start without at least $50,000, because anything below that, you know, you need to protect yourself from losses. If you go with good money management, you will protect yourself from big losses. And you need to make at least 2 or 5% constantly to pool enough money for paying the bills and normal living. So basically, with $1,000, you cannot go with full-time trading. With $10,000, you can start, but to build your account. That means to build your account. And if you have at least 50,000, you can think about full-time trading just for living. But try to get always another, try to have at least another possibility. If you want, you know, we forex traders, let's talk about forex trading. That means it's full-time job for you. You need to pay the bills, you need to pay the car, you need to pay your wife normally from time to time. I presume, and it's normal for me to make more money than my wife, right? Because my wife, she's not, you know, she doesn't work this kind of job, and average payment here in Serbia, average payment in Serbia is around 400 euros. So basically, it's normal for you to make more money than your wife. Then you need to, if you have children, you need to pay for them, for their school. You need to go on vacation. You need to pay for holidays. You need to pay for your car. You need to change the car. You cannot drive the same car all the time, right? And you know what I'm talking about. You need to make money for your pension. So basically you need also to put the money aside for your future. So scalping is just not the answer. Because I think I will make a webinar in July. I will make a nice relaxed webinar where I will talk about how I started a career, full-time career, and I will give you advices if you want to start full-time trading. From my experience, I will talk about it. And quick answer to a question, no, scalping is not the answer. The answer is build your account, then trade your account, but not with 1 or 2 pairs. Trade at least 10 pairs. And be sure to basically put the money out of, you need to withdraw the money for your pension. Because who knows what will happen in 20, 30 years, right? And another thing to add, you need to be really profitable if you want to be a full-time trader. If you lose, don't lose more than 3-4%. If you make money, well, try to get into the average of 2 to 10% per month. It's good, believe me. Anyone who tells you 2 to 10% per month is not good, he will be lying, because in the long run, I always tell you, Forex is a marathon. It's a fast-paced marathon. And you need to go all 40 miles to get from the start to the end. Now imagine 30 years of trading or 20 years of trading. So basically you shouldn't be kicked out of that marathon in 1 or 3 years. You should try to go from the beginning to the end. And that is the truth about Forex trading. Important thing is, I will make a special webinar about it, and it will be scheduled in July. I will write it down then. Something about Forex, full-time trading, and how I started to trade full-time, about money, about life. And I need to tell you, now let's get to the main subject. Don't scalp on NFP days. This is important. Don't scalp of NFP days. You can take the trade on NFP day. Friday, it is a day after tomorrow, is an NFP day. But you can take the trade 2 hours until 2 hours prior to NFP news release. So if you get up in the London session, you can go for London Open and 1-2 hours after the London Open. After that, volatility will fade. There won't be volatility. Prices will be stuck in the range, and market will be waiting for the news. Bank holidays, I don't trade on bank holidays. Basically, there is no one to defend important support and resistance levels, and market makers move the market when banks are on vacation, because banks are just 10,000 times stronger than market makers, and banks indeed move the markets. But when there is no one to defend important support and resistance levels, then basically is the time for market makers to do their bidding. Keep calm, it's bank holiday. Relax, go out with your friends, go out with your family, do other things. 15 minutes prior to and 15 minutes after the strong news data release. Sometimes, as I told you yesterday and many times before, you can go with scalping, but only 15 minutes, or just watch the price action. This is rough time. Usually it's 15 minutes after the strong news data release. Because if you're waiting for a long setup here and the price is there, usually those news can help us get at the better price. So be patient. Again, I'm talking about patience. Be patient. wait for the new spike to settle in. Then if it retraces, great, get on the boat at a better price. Sometimes good news will push price directly to the next resistance level. But many times those good news also can bring the price down just for other traders to be able to buy it from there and to basically trade with a better price. Scalping is usually 5 to 10 pips. It uses hourly pivot points or fixed target, 10 to 15 pip stop, and high frequency trading is also a way of scalping, but as I told you, many brokers do not allow you to do that. Now, a quick question. Do you pay taxes on income trading profits in Serbia? No, not yet. We are not paying any taxes on income from trading here in Serbia, not yet, but it may be happening soon, but not yet. And Darshan, I thought you were a wild bachelor boy. Yeah, bachelor. I have a university master degree. Thank you. Yeah. July webinar will be about forex trading full time. So, 5 to 10 pips scalping. Uses hourly pivot points or fixed targets. 10 to 15 pip stop, high frequency trading is also scalping, very efficient, but it's not allowed on many brokers. And of course, because you are using a smaller stop, the risk is bigger. So guys, you know what I'm talking about. Scalping is good way to make profits, but you need to know what to do. 10 to 15 pip stop usually. Scalp swings, this is tarantula. This is my proprietary term. I don't know if anyone uses scalp swing as a term, but I use scalp swing. Those are bigger scalps, 10 to 20 pips. It's a proprietary name, slightly bigger stops than 50 to 20 pips, bigger targets also, but it uses lower leverage than scalping, but still higher leverage than intraday positioning. Scalp swings are great for me. And intraday trading, intraday positioning is during the day. You usually will make a trade at the top of the hour. It's TOTH, 1 hour, 4 hours. So once the candle closes, you will be making a position. Or if the price gets to your level, then you will be making a trade. The difference between TOTH and price entry is this. If you make top of the hour trade, let's say that you want to trade off the support, you will be waiting for the price to hit the support and then subsequently close, because you will be waiting for the hourly close, right? Now, imagine this is a difference of 15 pips here. So if you enter after the candle has closed, you will be 15 pips far from the one who made an entry on the price itself. This is how I make entries on my Camarilla MACD. I don't wait for a candle to close unless special trades. Let's say that when I make divergence trade and I see shooting star and divergence in the same time, then I will of course make a trade. But usually I wait for the price to hit this zone or this level. I don't know how the candle will close. It may go down or up, but I wait for a specific level, and then when the price gets in the zone, I pull market order. I also have sometimes pending orders. Now, if you want to know what I will be possibly trading, I will tell you now. I have a pending order at Aussie New Zealand 1.0980. That is, I didn't make any analysis for Aussie New Zealand, but at the time being the price is, it's well 32 pips far from my pending order. If it happens to be in early Asia, I will watch for it, but I want it hold if I see a big momentum, huge momentum to the downside. I would like if it happened today, but it didn't. Now that is maybe sometimes that can be a little bit frustrating, but when you trade 20 plus more pairs, it's not frustrating at all, because usually you will get great setups for 1 to 5 or to 10 pairs. You just need to pick up the pair. So the thing is, if you make TOTH trade, you need to wait for the candle close. You will be getting probably more trades. But if you wait for a price entry, as I do, then you need to wait for the price zone. That is what I call POC on my analysis, point of confluence. Many traders ask me, what is POC? POC is the zone where I will make entry based on my analysis. That is the zone for the entry. Okay? POC, point of confluence. Do you break even quickly or take the risk until TP is reached? Ahmed is asking me. There is, of course, another subject. I will be talking about it later, but also in this webinar. I will show you in this webinar how to do that. And daily pivot point targets, previous swing high lows are used. Now let's get back to show you what I actually wanted to do. So this is the example how to basically turn a scalp into scalp swing. Okay, first we start with scalp, then we will turn it to scalp swing. You need to have hourly pivot point indicator. If you don't have this indicator, guys, I will explain everything about hourly pivot points. Sign up for this month's webinar. It's a premium webinar, and you will be getting hourly pivot points from me. Sign up for that webinar. That is a free gift to you, to all Admiral Markets premium account holders, and you will see how many tricks you can do with hourly pivot points. Those are dynamic pivot points which switch each hour. They are constantly changing. So let's say that this is the example. Now pay attention to this. Let's say that you made your entry here, and that is actually an example from Camarilla MACD method, which I use to scalp. On Camarilla MACD I use 5-minute time frame, usually in euro dollar, to scalp. And let's say that the trade entry was here, okay? And usually it will be this candle or this candle. I know it by default because I'm using Camarilla MACD, this scalping method, last 3 or 4 years. So basically I just invented it also with Camarilla. So it's coupled with Camarilla. It works great. And basically, usually the trade will be this candle or this candle. And now the stop will be put here because this is, you see, this is the S3 or S2, but it's the most recent swing low according to our pivot points. So just a little bit, 2 pips below this support, I would be placing my stop loss. Then let's say that I have entered there. So this is the first resistance. I can see that in this point, this resistance was broken. Now, at this point, I have 2 options. I can either take the profits here, or I can move my stop to break even. Now, I will move my stop to break even. After resistance is reached, don't close your order. This is second resistance according to hourly pivot points. Now, what happens is when price reaches this resistance, this R2 resistance, and breaks it, you can see the breaks here, here, and here. Those are all 2-3 pip break. I will move my stop here to R2. Effectively, I turned my scalp trade into scalp swing. Instead of making 10 pips, guys, I doubled my profits. I made 18 pips. And that is how I do. This is secret. Well, I don't know. Maybe this is not a secret. But, you know, I don't show this to anyone. This is how I do when I scalp. Why would I take profits here if I see the potential for the price to go even more? Now, you need to use your common sense. Either you will take those 10 pips or you will wait for the price to hit R2, then you can close it then, no problem. But if it passes R2 for 2 or 3 pips, it's easier to make break even here because maybe the price will reach next level. And now we come to the point when I talk about leverage of momentum and volatility. If you have the momentum, big, huge momentum, often the price will go here and it will proceed to the next hourly pivot point. Even if it hits R2, you didn't close your trade on break even, you didn't close your trade on here on 10 pips, but you close basically after 18 pips, doubling your size. And you basically started with this initial stop. And now think, what does that mean? Think about it. Let's say that your stop loss was 12 pips. Okay? You went for 12 pip stop loss for 10 pip target initially, right? Because you saw this resistance as the first target. So initially, sorry, this is my phone. Initially, your target is 10 pips, right? And you risk 12 pips for 10 pips profit, right? It's okay. I don't say it isn't okay. Because you're scalping, you know, when you scalp, usually 1-to-1 or less. It's normal, guys. Don't think it's not normal. It's normal. Especially in these market conditions. It's not the same as it was 5 years ago. Okay? So, now what did we make? Instead of taking 10 pips, we actually waited for momentum to give us the better target potential. And when price has indeed broke through this resistance, we put, and that is why you need to be close to your computer. We made our stops here. And we got 18 pips for 12 pips of a risk instead of 10, which is perfectly good. And this is even better. Now, scalp into scalp swings require hourly pivot points on any other hourly indicator. So sign up for this webinar, premium webinar. I will be showing you how to do this, how to do also other tricks with hourly pivot points. Knowing only R1, R2, R3 for that particular hour, you know that this, you know to know hourly pivots, not daily pivots. It can be done by last week highs and lows, but it's harder. And those are momentum trades. You need momentum for this to happen. If you don't have momentum, guys, you will end up with 10 pips, even less. But if you see that momentum is rising, go on for it. Now, how to turn scalp swing trades into intraday position. This is also, maybe this is my favorite. And it is my favorite. Usually scalp swings are done on M15 time frame. I'm not talking about specific method. Let's say that you are using multiple time frame analysis. You know what multiple time frame analysis is. You are basically going with 1 hour trend, but using alignment of a lower time frame to enter the entry. I will describe this as simple as I can. Let's say that 1 hour trend is to the downside and 15 minutes is actually to the upside. What does it mean? At 15 minutes, you will get better price because 15 minutes is in retracement mode and 1 hour trend is still down. So on 15 minutes, you will get a better price. And many good methods and systems will give you those MTF setups, multiple time frame setups. basically using a momentum of 1 hour trade to get into a loss of momentum on 15 minutes. So we treat 15 minutes as a retracement, guys, not as a trend change. If you understand what I mean, I think I was clear enough with this one. So you're using 1 hour momentum for 15-minute entry if 15 minutes has lost its momentum. How you know that 15 minutes lost its momentum? You know it if it starts to retrace. If the trend is down on 1 hour and on 15 minutes it's basically it started the retrace to the upside, then you know that on 15-minute trend is lost and that is safe to go for a next leg to the downside. That is general opinion for multiple time frame analysis, and some good methods show that. That is how I basically, okay, Camarilla MACD is even simpler, but you know what basically the primary logic behind this trades is. Wait for a trend 1 hour or 4 hour, and then if you see on 15-minute a counter trend, then you basically enter. This is what I meant. General trend is down. You need to have daily pivots, and I will be sharing daily pivot points also on premium webinar, so sign up for that. General trend is down, and look now, yes, on 1 hour it's a downtrend. This is classic zigzag pattern. Look at this. It's very easy, guys, to know where the trend is. Let's say this is this is trend line. At this point there was a breakout. This is retest trade, and this is continuation trade. And now this is a great example to show you before I proceed with this breakout, pullback, breakout, retest, breakout, continuation trade. I will be fast with this. This is breakout and this is pullback. So if you make here an entry, it will be trigger happy entry. If you make your entry here, this would be your breakout retest entry. And if you made a trade here, 2 pips below this point, that is breakout, pullback, continuation. Okay, now you're clear again with that. So when you see that the trend is down, you switch to 15 minutes and you see that 15 minutes has lost the momentum and it's retracing. This is 1 hour swing from the highest to the lowest, from the left to the right, how Fibonacci is done, and you see that on 15 minutes the trend is to the upside. It's great because you will be making here your entry. Shooting star, 50 pip retracement, confluence. And now, this is the example. When 15-minute low is broken, this is 15-minute low, okay? When this low is broken, we will move our stop loss to break even. So guys, when this low is broken, you will move your stop loss. Let's say that your stop loss was here. Once this level is broken, you will move your stop loss to break even. Let's say that this was your entry here. And now, when first target is hit, so this is your first target. This is free ride. That is how we call it, free ride. Now, when this level is hit and brokered by 2 pips, you move your stop loss to S1. So if the price goes here and breaks this level by 2 points, you immediately put your stop loss here. So effectively you trade it from here to here, and you can see on the chart it's 22. Guys, it's 22 pips to 37.00, and it's 52 pip trade. And this is how you basically move from the scalp swing to intraday positioning. It is good, right? But if you trade only one pair, you know, chances for this to happen, I'm not sure how big they are. But on 10 pairs, there will be many opportunities to turn scalp swings into intraday positions. And that is why important is to trade more than 2 pairs. So the simple logic is you use 1 hour trend to make 15-minute entry, and then you need daily pivot points, which I will be explaining again on a premium webinar. I will use more examples, of course. Daily, and these are not the hourly pivot points, these are daily pivot points. And basically, when this low is broken, you move first your stop loss here to break even. It's a free ride. And usually now, what can happen? If the price indeed retraces here to this point, chances are that the price will proceed even higher. So basically, it's most logic to put your stop loss here once the price reaches this level, breaks this level. And then if the price makes it to here, immediately after price breaks 2 points below S1, you move your stop loss here to S1. Effectively making plus 50 pips trade. Now, few questions. Hourly pivot point on what time frames, daily pivot? Guys, hourly pivot points, you use it usually on 5-minute scalping systems. I will show you that on premium webinar. So, hourly pivot points are put on 5-minute charts. Daily pivot points are put on 1 hour time frames or 15-minute time frames. Okay? So daily pivot points on 15 minutes and 1 hour, and 5-minute charts, hourly pivot points. Okay? So watch 1 hour trend pattern zigzag. Scalp swing turns to intraday only if the high low is broken. So guys, this is important. Scalp swing, because we are talking about swing. This is the swing. And scalp swing is successful only if this level is broken. Trail the stop by daily pivot point or any other reliable pivot point. I recommend daily pivot point. When S1 R1 is broken by 2 or 5 pips, move stop loss to S1 R1 and target price to S2 R2. Many more. This is introduction, guys. Many more examples will be shown on premium webinar for daily pivot point, hourly pivot point indicator. Of course, ATR indicator can be of great help. Okay? So, once more, quick and we finish. We are already over the time. So, scalps on 5-minute, hourly pivot points on 5-minute time frame. This is how you make scalp swing by using hourly pivot points. Scalp swings into intraday positions only. You need to watch general trend. You need to lower your time frame to make your entry, and once the low of the entry time frame is broken, bang, you are making a scalp swing trade. Okay? And many more will be shown, of course, on premium webinar. Experiment with trailing stop. Scalp swings into intraday work more frequent than scalping to scalp swings. That's normal because you're using a higher time frame momentum. And you can also use ADR indicator for spotting the confluence of daily pivot point and ATR points. That is what I will show you also on the premium webinar. How to use ADR indicator, which you got if you were attending premium webinar with daily pivot points. So this is all. If you have any questions, you can ask me. If not, of course, you know what to do. Sign in for many other good webinars, of course. There will be many other. Watch that analysis on Almer Markets blog. Use my analysis to help your trades also. And we will talk soon with new subjects, and sign in for weekly Forex recap. So this week was exceptionally good. I really got great trades on euro, dollar, and cable, especially even on GBPN, 30 pips. So be sure to sign up for that. Thanks for all the jokes, all the good comments, and all the bad comments, if any. So thank you for listening to me, and I will talk, guys, with you very, very soon. Cheers everyone, and many green pips to you. Be careful on Friday though. Cheers.